It's Thursday, the 28th of November, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1. Underlying inflation in Australia remains stubbornly high, well above the Reserve Bank's preferred level, meaning, unfortunately, rate cuts are off the agenda, at least for the time being.
Yes, the trimmed mean inflation, which is the Reserve Bank's preferred rate, rose last month, rose from 3.2% to 3.5%. We actually want it falling. Price pressures are being felt across a broad range of consumer goods and services. The headline inflation is actually really good. It's 2.1%. The difference between headline, 2.1%, and trimmed mean, 3.5%, is mostly the energy rebates that the federal government is giving and in some states are giving, like Queensland. It actually artificially lowers the real state of price rises in the country. They're going to win, so the Reserve Bank basically ignores it. It's interested in this underlying rate, and that is way too high. Rents were up sharply over the past year due to a tightness in the market. Fruit and veggie prices were also much higher. Underlying inflation has now been above the 2 to 3% target for 3 years, way too long. Why is that? Supply constraints, also persistent demand from post-pandemic spending and a strong labour market.
Sean, it looks like the economic cycle might not marry up with the political cycle, at least if you're the Prime Minister.
Very true. The election is due in the middle of May next year. It's unlikely to happen after a rate cut, as in a rate cut won't occur until after the next election. The Reserve Bank has said it wants 2 quarters of lower inflation before moving on rates, which are at 12-year highs. Also, there's been budget analysis from Deloitte Access Economics over the past couple of days that suggests that there's a much bigger budget deficit than expected or than actually forecast by the government. That's not a good thing when you're trying to get re-elected. Then there's the Trump factor. All in all, the political and economic cycles are not lining up for Anthony Albanese.
Indeed. Story number 2, the pot of gold that is superannuation in Australia has climbed above $4 trillion for the first time.
Let's have a party. The Australian Prudential Regulation Authority said that total assets in the September quarter were up 3.7% to $4.1 trillion. Couple of reasons for that: higher contributions. The superannuation guarantee jumped from 11% to 11.5% on July 1, therefore more money in your super fund. Also strong market returns. Both the ASX and Wall Street are at record levels. So $4 trillion in total super funds, about a quarter of that, $1 trillion, are in self-managed super funds. There's a lot of industry pressure There's a lot of pressure on that industry at the moment on the back of links with the union movement, how they spend money and performance. But it's a sector that just keeps growing, still well below the housing market in Australia. That's worth about $11 trillion.
Story number 3, Sean. Harvey Norman held its annual general meeting yesterday, and Chair Gerry Harvey said Australia is heading into a great big black hole of government debt. He does not mince words.
He doesn't. The veteran retailer, been doing it for 60 years, said Australia will be in a much worse position in 5 years' time if we keep going the way we're going, according to a report in The Australian. He said rising costs for health, the NDIS, aged care and social services would push us into that great big black hole of government debt. He doesn't think interest rates will be significantly lower for another 12 months, although the Australian economy is doing okay. Same-store sales were up over the last 3 months ago. He doesn't seem too worried about online retailing. Where Harvey Norman are doing particularly well is in large format home and lifestyle stores and communities with, and I quote, supportive economies, strategic regional planning and efficient transport and logistics systems. Its share price closed up 3% yesterday.
Story number 4, a bit of good news, Sean. Israeli and Lebanese leaders have accepted a US-brokered ceasefire deal, raising hopes at last of an end to the year-long hostilities between Israel's forces and Hezbollah.
It came into effect at lunchtime yesterday, Australian time, after it was approved by Israel's Security Cabinet. It also had to be approved by Lebanon's caretaker government. US President Joe Biden said the deal was designed to be a permanent cessation of hostilities. Israeli Defence Forces will gradually withdraw from Lebanon over a period of 60 days, be replaced by the Lebanese army. Hezbollah, the Lebanese militant group, will be barred from rebuilding its infrastructure in southern parts of the country. Australia's Foreign Affairs Minister Penny Wong welcomed the announcement, saying she hopes it's a catalyst for a broader ceasefire.
Last one, story number 5. How about this? US retailer Macy's has delayed the release of quarterly results after it revealed an employee had hidden, but not stolen, at least $132 million worth of expenses related to customer deliveries over the past 3 years.
No idea why you do this. The lone employee who had responsibility for small package delivery expense accounting had intentionally made erroneous accounting accrual entries to hide between 132 and 154 million of cumulative expenses over the past 3 years or so, according to Macy's. Now, Macy's owns its namesake chain of department stores along with upmarket Bloomingdale's and the Blue Mercury Cosmetics chain. Hasn't had a good time of it recently. Share price down 20% this year. According to the Financial Times, Macy's did not disclose the name or alleged motives of the employee. I'd love to know what the motives were, Michael. They said the person had left the company. No surprises there. The alleged amount concealed was a fraction of the $4.36 billion in delivery expenses that the company recognised during the period. Still, why did he do it?
That story is just bizarre. It's also a good way to finish off. It is the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 28th of November, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.